What's up guys, and welcome back to my channel. So today I'm back again with another strategy that we're going to be using to trade indices. Okay, so for this strategy we're going to be using the ichimoku, right, and the relative vigor index, right, so the RVI. Okay, so let me show you what the settings before we jump into this video. Okay, so as I said, we are using only two indicators, right? So for the ichimoku, let me start with the ichimoku, right? Then you can take a screenshot of this so that you can install the indicators later, right? And copy these firstly these levels, right? And then these colors. Those are the most important things that you have to take note of, right? So after taking a screenshot of this, so Tenkan Sen is 9, Kinjun Sen 26, then Senkun span is 52, right? So these are the default periods, the default settings, but I only changed these colors, right? So that's what you have to change. Okay, then click done, right? And then for the relative vigor index, we are going to be using period 10, right? Then click done, right? So it's very important that your ichimoku looks like this, right? If it has got many lines, you would have done something incorrectly, right? So let me jump into the video. Okay, so here, when we want to use this strategy, firstly we are going to be scalping. Okay, so we can use this strategy on the 1 minute and on the 5 minute time frame, right? So firstly you go to the higher time frame, right? After going to the higher time frame, you can check the market structure, what the market structure is telling you, right? So this is the 15 minute time frame. We are breaking structure here, broke structure to the downside here, broke structure here, right? And we continue as well, broke structure, right? So in this minor lows right there, right? So generally we are in a downtrend, right? Then you shift back to your 5 minute time frame. Is the same thing, right? We are breaking these lows right there, right? So we are in a downtrend, right? So then you shift to your 1 minute time frame for your entries, right? So for entries, right, now we're going to be entering the market whenever. Okay, so firstly this cloud here. Okay, let me change this color. Okay, so the ichimoku cloud, right? This cloud here, it can either be green or red, right? So that cloud, we want to use that cloud for our sales, for sale opportunities. For sales, we want to see this cloud above the candlesticks, right? And we want to see it change color to red, right? As you can see in here, it was above the candlesticks, but it was still green somewhere in here. It was still green, so we don't enter right there, right? Then we are going to be entering when the cloud changes color to red, right? So that's when we start looking for sale opportunities, right? So yeah, okay, so we're going to be entering, we are going to be entering when the first condition I have already mentioned it. Then for the entries, we are going to be using the relative vigor index, right? So whenever the relative vigor index crosses above the zero level, this is for a sale, we enter when it crosses above only, right? If it crosses below the zero level, we won't take the entry, right? So if it crosses above the zero level, we take our position, right? So it crossed above the zero level here, somewhere in here, right? And then went back, right? So we're in profit. Then we exit when it crosses back to the upside, right? So that we want to be continuously doing, right? We enter when it crosses for a sell, and exit when it crosses for a buy. Let me zoom in once so that you can see this clearly, right? So here, enter somewhere in here, right? And then exit when it crosses here, right? Then that's what you'll be doing. So you'll be scoping the market. So then for your stop loss, stop loss, you can either let's say this RVI crosses for a sell and then crosses back for a buy, you can exit the trade, right? That's one. And then if this cloud, this Ichimoku cloud, if it is broken, right, if the candlesticks go above this cloud, we exit the trade, right? So like here, as you can see here, we're in a downtrend, right? And then we could have entered somewhere in here, right? So our stop loss is when this RVI crosses back to the upside, right? Or when these candlesticks break the Ichimoku cloud, right? Because most of the times it pulls back and it doesn't break, right? So most of the time we can use this Ichimoku. We will be using this Ichimoku cloud as a trend line, as a dynamic trend line, right? So those are the entry and the exit points, right? So here we've got another entry here, right? Another entry here. It's relative to these eyes right there, right? So that's what we'll be doing. So practice this out on demo before you go live, right? Here we've got another entry here, and here. So here it's relative to this eye, and that one is relative to this eye, and this one is relative to this eye. So that's what you'll be doing. It's quite a profitable strategy. Just try this out on demo before you go live. Then let me look for somewhere where it contains for an uptrend, right? So let's take the M15 time frame, right? Okay, so here on the 15-minute time frame, this was breaking one. Okay, so let me shift to here. So this was breaking one. So this was in an uptrend, right? Then we go back to the 1-minute time frame, right? So here we are only looking for buys when the Ichimoku cloud is lower, like in the stick, and you change green, right? That's when we're looking for positions, right? So here we've got these are the entry points that we had, right? So this is relative to this position, and this one is relative to this position right there, and this one is relative to this position. So that's what you'll be doing. So try this out on demo before you go live, and then come in the comment section and tell me how it goes. Okay, so thanks for watching.